The chip exports to save the month, do you think that would continue? How much of that is perhaps China front-loading on semiconductors? Do we have any numbers around that?
So there are three trends that are helping South Korea, and this is our view has been the same since last year. A, very favorable base effect. So last year was abysmal, so it's very easy to statistically grow, of course. The second one is China imports to improve. Let's not forget that no matter what happened in the U.S., strong growth in China, imports were actually down globally, and that really hurt South Korea. So actually the ICT cycle is on an upturn. So if you look at U.S. PMI, what it shows is that inventories are very low and orders are going higher. So with the manufacturing cycle returning to growth in the U.S., that should support South Korea. And of course, the third factor is, of course, this normalization of China demand. So even if China growth slowdown is happening, we should see higher imports from China because it's quite important to the ICT cycle. Overall, the first 2 months, if you just average it out so you get this Lunar New Year effect, it's 18 plus 4 something, you get an average of double digits, right? A bit above 10% for the first 2 months. So that's actually quite positive, and we think that trend will continue for the rest of the year.
Yeah, so that should actually give the Bank of Korea some room to pause, some wiggle room to really wait for more data points to come through. But what about inflation expectations here? Because some commentaries around February inflation to pick up again has to do with agro produce as well as oil prices coming back up. And what does that really suggest for your Bank of Korea expectations for the rest of this year?
Absolutely. So if you look at the trade balance, is positive because imports are going lower. That's very positive because we had the energy crisis, high LNG, and so on and so forth, pushing up imports. So the lower imports is actually quite positive for South Korea. Now, looking forward, we have some seasonality effect that's affecting CPI. Growth is not a challenge this year because we have a cyclical upturn, as you mentioned, due to exports and so on and so forth. But one thing to be mindful is that the Bank of Korea is very, very, very sensitive to what's happening in financial markets, right? And we have project finance, that's a big concern. The real estate sector is quite a concern. South Koreans are very leveraged, so they're quite fragile. So it will tread very carefully. And the third factor, of course, is the Korean won, which basically appreciated in the month of February because of these factors that we just discussed, the improvement of the trade balance and so on and so forth. But the dollar is still very strong, right? Overnight, you saw the dollar surge against the euro. And if the dollar is so strong, that puts depreciation pressure on the Korean won if it cuts too early. And that actually adds to inflationary factors beyond the factors that we just discussed, which is the seasonality of food and so on and so forth. So the Bank of Korea will be very cautious. We think, even though it's stated that it's going to wait until the second half, the governor stated that, I think it's going to be the second quarter where it will happen, but more likely the end of the second quarter. So today is March 1st. It's still too early for the Bank of Korea to basically start to have a dovish tone. It will take a hawkish tone until it tilts.